Good morning, everyone. This is the first time I used that countdown thing, and that music was pretty nice. Almost put me to sleep. Uh, Usually I get on here and then I have to wait like 10 to 15 minutes for others to hop on. So I decided to do a countdown so everybody can be reminded that we have a webinar. So my name's Jasmine, and I will go over futures basics. Basically, everything you need to know how to get started trading futures, whether that is, with your own money, um, with prop firms, whatever it is. So it's basically the fundamentals. I think that a lot of people just jump into futures without any sort of knowledge, and this is essential, like for futures traders, just to get the basis of it and not learn as you go. Um, when I started trading futures 3 years ago, I came from options, so I was trading options, and before options, I was trading like equities, and then before that, it was penny stocks. Um, I had no one to really help me with the futures basics, so a lot of it was trial and error. And it cost me a lot of money trying to learn things on your own. I mean, there were not as many futures traders as there are now, obviously, but I couldn't find anything where I had it all like in one place. So I've been teaching this for 3 years now, um, and let's get started. Also, I will go over everything at the end, any questions that you may have. So please don't feel like there's a question that you may think is dumb, because no question is a dumb question. It's a good, if you have a question about something, perhaps others might as well. So, and then I'll do some giveaways at the end, some to Traders Wealth Lounge Premium, and then some free, I'll do like one free account um, to a prop firm. So I will not stop the stream to answer any questions, but at the end I'll go over everything, and then I'll also show you guys like a demo. Um, Even though it's Saturday, so I have to do a replay on TradingView to show you guys just kind of how you execute and how it moves once that is in play. So let's get started. Okay, so futures 101. So, what are futures? Futures trading is basically a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. There are two participants, hedgers and speculators. Just a quick sec. Good morning. I just want to double check before I continue. Can you guys see my screen well? Do I need to adjust anything? And can you guys hear me well? For some odd reason, there's like a delay when somebody types in the chat. Good. All right. Thank you so much. All right. All right. Let me continue then. So there are two participants, hedgers and speculators. And hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. Okay. So futures contracts are available on 5 different assets: equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they have expiration dates. Also, with the giveaway at the end, I'm going to ask some trivia questions uh, from the slides here. And you can also, if you want to go along with the slides on your own screen, you can go to the propfirmtrend.com website and click on the educational resources, and it's going to be there. So, all right. So basically, your broker is going to automatically prompt you for a rollover notification when they expire. Um, Equity index futures expire typically on a third Friday of every third month. So S&P 500 or E-mini ES expires quarterly, which is March, June, September, and December. And so, like right now, we're in October. We just about a month ago rolled our contracts to the December contract. So in December, we're going to roll them over to March. And you don't have to like really remember that because it's going to automatically ask you to do it. But if you trade like interest rates or oil, commodity futures, currency, metal futures, they expire monthly. So same thing, you're gonna get an auto rollover notification to prompt you to roll over. So basically, the purpose of this is to teach some of the fundamentals and how futures work, how you can trade them on your own account, how you can get funded accounts, um, since I believe that many would benefit from adding futures trading to their skill set. So some of the key terminologies used in futures trading, I don't really have to go over these down here. It's self-explanatory, but you're going to hear quite a bit of like lot or contract. It's basically unit of the instrument. So if I say I am in 5 lots of NQ, that's all it means is that's how many contracts I bought. Tick is the smallest price movement that a futures contract can make. Okay. And point is $1 move or one handle. Globex is an electronic trading platform used for derivative futures and commodity contracts. But traders also use the term Globex to mean like if they're trading the Asian session, which is at night, or European session. So they'll say, "Oh, I was trading Globex," right? And then the RTH is the regular trading hours for a specific exchange, which is typically surrounded around the New York Stock Exchange Open. So margin is the amount of money required to be deposited by a trader to open a futures position. The rest is fairly self-explanatory, so I don't need to go into that. So first off, the market is essentially futures. So we frequently discuss ES, okay, or the S&P 500. Now, although these futures are traded similarly to other derivatives, leverage is what they offer above all else. So futures trading is simply a very leveraged form of stock trading. So to contrast the futures, an E-mini S&P 500 contract offers roughly 32 to 1 leverage. And because ES trades in ticks, which is aka a 0.25 spread, one contract changes value by $12.50 for every 0.25 it moves. So you gain or lose $50 when ES moves 1 point. Okay. So for example, if ES changes by 10 points, you either win or lose $500. Now, tenth of an ES is a micro contract, and instead of $50 per point, it's $5 for each point on MES. So simply, it's a tenth of the same stuff. Okay. Let me see. So each futures contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. And futures trade in a manner more akin to shares than options. So there's no theta, there's no IV. Stop losses can be placed at precise price points. There's no decay of your contract. So for example, I just went over the ES, which is the S&P 500, but let's say we want to look at NASDAQ or NQ. So one NQ changes value by $5 per tick or $20 per point, but one MNQ changes value by 50 cents per tick or $2 per point. So it's, 1/10. The micro is 1/10. Now, if we look at oil or CL, it changes value by $10 per tick or $10 per 0.01 cent. So each penny or each cent is a tick worth of $10. So it's 1 point or $1 is $1,000 in trading that. So if let's say we're trading oil is at $60 and it goes from $60 to $61. So that $1 move is actually $1,000 for that one contract. And like I said, when I got started, I didn't really have anybody explaining anything to me. So, and I did I thought I did due diligence, but I guess I didn't. So when I traded oil for the first time, I had just gotten into it and I'm like, I'm down $80 and it didn't even move. I was like, what? I don't understand. So I was down 8 cents, but that was, $80 because it's $10 per each penny. So it's important to kind of know the difference between because they don't always trade in the same, manner. And so like the index ES and NQ, there are 4 ticks in each point, but in CL there's 100 ticks in 1 point. So it's a little bit of a difference there. Now, one thing though is that what I see when traders come in to trade futures, many new traders jump straight into NQ or ES, thinking they're just trading futures when the risk is equivalent to trading the full index value. So they don't realize that trading NQ is like trading NDX and trading ES is kind of like trading SPX. So most traders should start out by trading MNQ, which is more akin to QQQ, or MES, which is kind of like trading SPY. So imagine you're an options trader and all of a sudden your first time trading, instead of going to SPY or QQQ, you jump into trading SPX or NDX. Well, you're going to learn the hard way. So size down, and that's the biggest way that people will lose their accounts is, they're over leveraged, they're oversized. And I'll go over some of the stuff in the calculators about sizing. But that's kind of an important thing to know, that the micros is what you should really start out with. It is obviously, don't trade NQ when your account says you should be trading the micros, the MNQ, or, don't trade ES when it says you should be trading in MES. So futures market is open 23 hours a day. You must close out your positions by 4:59 p.m. if trading on funded prop accounts. Top Step is one that makes you close your position by 4:10 p.m. But others, you have to check their website and their rules. But it opens Sunday at 6 p.m. Eastern, closes Friday at 4:59 p.m. Eastern. Typically, the best times to trade during the New York Stock Exchange market open or during European markets, which is in the middle of the night. And then you also need to check the holiday because the hours may vary. So, for example, we had Labor Day weekend back in September. Futures opened at 6 p.m. that Sunday and closed at 1 p.m. that following Monday, whereas, the New York Stock Exchange was closed that Monday the whole day. So this right here is actually just it's like a cheat sheet of comprehensive futures contract specifications. So it'll tell you, S&P 500 or ES. Minimum tick is 0.25. So for every 25 cents that it moves, it's $12.50. If you are trading the micro version of it, then it's $1.25. If you look at NASDAQ, NQ is minimum tick, same thing, 0.25 and $5 per tick. Oil, 1 cent, $10. So just kind of, it's a good thing to have if you're trying to get into like trading gold or oil or corn, I don't know, whatever whatever people are trading these days, but I'll say the most people stick to either ES or NASDAQ, followed by oil and gold. Okay. So there are different ways of getting funding. Okay, so I'm going to start with two different ways of funding your own accounts with your own capital. One way is if you have, traditional brokers such as Interactive Broker or, IBKR or TOS. You can trade micros, which cost roughly about like $2,300 for for one MES lot, and about $23,000 for one ES lot. Okay, you want to check with your broker how much capital you would need for these, but you're able to swing trade with this, swing over the weekend, that kind of a thing. However, if you use a broker that specializes in futures, such as NinjaTrader or Tradeovate, I believe Webull also has. Uh, I know that they have futures, but I believe that they also have the reduced intraday margin. I have not used their futures, so AMT is another one. So basically, instead of the $23,000 for the traditional broker, Tradeovate offers $500 to $1,000 a day trading margin for E-mini contracts. So micro contracts are even more affordable because MES costs only $50 um, for day trading margin, and MNQ costs $100. And this is for the day trade margin only. Okay. Overnight positions require full initial margin. And that means, like, for example, if you are wanting to swing trade these, then you want to hold it for a weekend, then you would need to have the full initial margin. So current tradeaway margin, for NQ, it's $1,000. For the initial margin, it's $33,000. Also, NinjaTrader owns Tradeovate, so you can fund your NinjaTrader and use the money on Tradeovate platform or vice versa. You can also go to their websites and practice on their sim demo accounts. But basically, the distinction is that when you purchase or sell a contract, you're not purchasing ES shares. So therefore, it costs the same amount of money to buy or sell one contract, regardless of the price at which ES is trading. And margin is the term for this. So TOS and IBKR, like I said, needs, like 23K if you're wanting to use the full initial margin for a single contract. But for a broker that specializes in futures, as a result, it is actually fairly affordable, making it a good choice for those that feel comfortable trading their own money. Also, margins do change based upon news events, like if we have CPI or FOMC. So you'd want to check with your broker about the specifications. So this right here is, this is from Tradeovate. But basically, Tradeovate offers a reduced margin for both the day session as well as the overnight session. And what does that mean? So if you see this on the left side where it says day margin, and then on the right it says initial margin. So day trade margin is offered, or the reduced intraday margin is offered between 6 p.m. Eastern until 4:45 p.m. Eastern the following day. So when you are getting ES, it's $500. If you're getting or trading NQ, it's $1,000. However, if you're trading the micros, it's only $50, and MNQ is $100. Okay. So you can hold the position for almost like basically 23 hours. Whereas if you want to hold between 4:45 p.m. until 5 p.m. Eastern, so for like an hour and 15 minutes, then you need to have, per contract, you need to have this initial margin, which is 23,000 for ES and 33,000 for NQ. So, and same thing if you want to hold it over the weekend. Okay. There are times when it's great, like when we have a 700 point, no, I'm just kidding. When we have like a big, gap up or something over the weekend, but the same thing can happen if, like if you're in the wrong direction, you could also lose that. But as a day trader, as a scalper, I don't need to, have $33,000 in my brokerage account. I could have $10,000 and use, if I want to trade with 5 NQs. And this, I'm just giving you guys an example. There's no PDT with futures, so you can, get in and get out of your trades as many times as you want. Trade it as much as you want. There are commission fees, but we are not affected by the PDT rules. So, you know, uh, to have to carry one NQ, I don't need to, um, have the $33,000. Sorry, to carry the NQ, I would need to have the $33,000, but because I'm a day trader, I don't. And I can still hold a position for 23 hours, close it at 4:45 p.m., and open, my position at 6 p.m., so an hour and a half later, if I really wanted to kind of, take advantage of that swing. I'm not really a swing trader, so. um, and the account minimum is only about $250 to open a Tradovate account, which is one of the lowest in the industry. And like I said, you can stick to the micros if you want. But the next one is trading prop firms. Now, I know you guys have seen this all over social media and everywhere, and there's so many prop firms that are popping up. But basically, you would utilize a finance partner known as, Tradeify or Apex Trader Funding or Take Profit Trader, the Futures Desk, Top Step, My Fund of Futures, whatever. There's so many others, right? I'm just going to use a few as an example. Tradeify has a 1-day pass, whereas like Top Step has a 2-day minimum evaluation, where you can be funded in as little as 2 days. Now, Take Profit Trader has a 5-day, and but once you pass, Take Profit Trader has a daily withdrawal. So in this scenario, I'm going to use Apex as an example. Okay. So basically how it works is you demonstrate to the prop firm that you are a successful trader. You must pay to enter the evaluation, which is a SIM account. Okay. So if you succeed, then you will be given a funded account to trade with. You pay the activation fee. Note, some firms don't have any activation fees. It depends on the accounts and prop firms, but you get to keep all of the proceeds 100% up to $25,000. Now, after the $25,000, you keep 90% of the profit and they keep 10%. So you want to see the prop firm rules for whatever prop firm you're utilizing because they're all different. Some have 90% profit split. Some have 100%. Some have 80%. So again, just read through the, through their rules and do your own due diligence. Some people get multiple accounts when on discount, so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation standalone because they're all standalone accounts. Okay. One thing I do want to mention is, because I have gotten questions, do you get to keep the money when you are going through the evaluation test? No, you don't. When you're going through the evaluation, it's simply for them to see if you can trade under their rules. Regardless, these are sim prop firms, okay? So then you get moved to a sim funded. And in the sim funded, or if you go straight to funded accounts, you get to keep the money that's in there before you get moved to live. Now, some firms offer live, some firms don't. Some say that they'll, like you'll go into a live account and never do, which is fine as long as, for me, I don't care if I'm trading crayons and I'm making money. Um, to me, doesn't it doesn't make a difference. Um, Now, is this too good to be true? Not really. Most traders fail due to lack of discipline. And this is how these companies make money. So I don't care if you're trading options, crypto, futures, with your money, with your grandma's money, with prop firm's money. If you are not disciplined and you don't manage your risk, you're not going to make it. 95% of traders don't make it. And it doesn't matter if it's a prop firm or not. That's just unfortunate that those are our statistics. Okay? So, if you know how to read the chart, you can trade the chart, such as price action, and you can stay disciplined and consistent and size down. I cannot tell you guys how much that is important. And what, again, whether you're trading options or not, or futures or not, it's really, you're going to stay in the game longer if you are sizing down. Um, if you're full porting, well, you're not going to last very long. So, there are people all over that have withdrawn money from prop firms when they've never withdrawn money from their options account, but they also become consistent. So the worst thing that can happen is you lose your account evaluation fee. You don't pay back any capital. You can also take these evaluations as many times. It's not just once and that's it. Um, so in my opinion, if you just want to test out futures, you can either go to like Tradeovate or NinjaTrader. They've got a free demo account to play around with, or you can start out with like an evaluation, which they have tight regulations, but you're essentially forced to have good habits and to make it. Um, so this right here is from Take Profit Trader, but basically, why prop firm versus trading your own money? Now, let's be real. Simply put, most traders are undercapitalized, and you level the playing field by using their accounts and not your own funds. Okay. All of the technology, live data, everything is set up by them. There's no, documentation and painful account setup experiences. Trading your own funds, can lead to severe losses. However, with a prop firm, your losses are limited to your associated challenge fees. So if the fee is 30, challenge fees like $30 or $50, whatever it is, that's, if you lose that, that's what you're going to lose versus trying to learn it with your own money. I can guarantee you're going to lose a lot more. So also, a lack of discipline haunts traders, and their risk management system and their rules make sure that you stay disciplined during your trades. So, I'm going to explain this is one thing that a lot of traders do not understand. Especially when they start, like I say, a lot of people get started trading futures. They don't read the rules. They just wing it, and then they get upset about something because they did not care to look it up. They didn't care to follow the rules. They thought, hey, I'll just, make this profit and that's it. It's not how it works. So let me show you guys a little bit of a difference so that when I start talking about this, it's going to make sense. Hold on, let me see where. Let's start with Tradeify. Okay. Okay. So for Tradeify, they've got, if you see up here, Lightning Funded, Growth, Advanced. So some firms have, instead of taking the evaluation, actually, let me talk about the evaluation first. So this is their growth account. And it basically, if you meet the profit target, of $3,000 and you don't go below the $2,000 of your max drawdown, and you pass in one, it takes 1 day to pass, you will get a funded sim account. Okay. And this is also, the drawdown mode is end of day. If you take their evaluation where it's even, you got to look at what it offers, but same thing, profit target is 3,000. Intraday drawdown mode is intraday, and your trailing max drawdown is $2,000. Minimum days to pass is 1 day. So if you hit if you hit $3,000 in 1 day, this is for a 50K account, you will get an email that night that you passed the account, and that's, starting the following day, you don't, anything that you earn in that account is what you get to keep. Okay. So for this one, for example, when you see where it says advanced, there's an activation fee of $125. But if you're doing this one, there's no activation fee. Okay. Now, let's say you want to skip the evaluation completely. You don't want to even, you just want to, I don't know, trade in whatever you make in that account. This is called Lightning funded. Some firms call it direct. Some call it instant or straight to sim funded. And basically, you don't have to meet any, goals as far as like passing an account because you're already passed. So, you pay a fee and you just don't go below your trailing max. Draw down and follow the consistency. And when you hit that threshold, you're going to basically be able to request a payout. Here, I'm going to pull up, this is Apex, okay? So they've got, it's called Wealth Chart. I don't use that, but like, let's just say a trade of a plan, just to give you an example. They also have like 80% off. Same thing. If you look, the profit goal is about $3,000, trading threshold $2,500. Right now, they've got a promo to pass in 1 day. You do not have to pass anything in 1 day. The more you push it, the more you're going to, risk losing your account. So let's go to Top Step. Same thing though, as far as like the meeting the goals. $3,000 for profit target, can't go below 2,000. So as you can see, they are very similar as far as what it takes to pass the account. So what does this mean? So understanding the drawdown types, intraday versus end of day versus static. Oh, and actually, I'm going to show you guys a static one. So the futures desk has one of the best ones out there. Let's see, static. So you can actually customize if you want to have a daily loss or not. You can customize your contracts, how many you want, your drawdown, days to live, between 5 and 10 and 12 days. Once you pass this, then you get daily withdrawals. But basically, you can have up to $6,000 drawdown. So when I go back here, it's going to make more sense for you guys. So basically, intraday trailing, how that works. So your drawdown limit moves up with your balance and unrealized gains throughout the day, but it resets to the daily starting balance each day. So for example, 50K account with 6%, so 3K drawdown. Okay, so your day starts at 50,000, your drawdown is 47,000. So let's say at 10 a.m. you make $500 profit, your balance is now 50,500, and your drawdown now moves to 47,500, which is the $3,000 behind, your profits, right? It's trailing behind you. Let's say at 11 a.m. you make another $300. It takes you to 50,800. Your drawdown moves again to 47,800. Okay. So let's say at 1 p.m. you open a position with, now you're up $600 unrealized gain, which is, your balance is at 51,400 unrealized. Your drawdown moves to 48,400, which it trails unrealized gains. Okay. So you close out your position for $400 realized. So not the full, amount, but you close it, your drawdown still stays at 48,400. It doesn't go down. So at 3 p.m. you lose $400. Your account is at 50,800. Your drawdown stays at 48,400. It doesn't go down. The remaining drawdown is $2,400, which is $3,000 behind the the highest. So next day it resets to 50,800. You have $2,400 left in your available drawdown. So if you go to the intraday trailing is probably best for traders that size down and also take base hits. So, or scalpers, you don't need, to hold all day. And so it's for traders like that. If you are more of a trader that likes to hold a position for hours or whatever it is, then you would probably want to look at like end of day trailing. And how this one works is your drawdown limit only moves up based on your ending balance at the close of each trading day. Okay, so for example, 50K account with 6%, 3K drawdown. Okay, so your day one starts, your $50,000. Drawdown is 47. Total drawdown is available 3,000. So during the day, you go up to 51,500. Then you go down to 50,800. Your drawdown is still going to stay at 47,000 all day. That total drawdown available is 3,000 because it stays fixed all day. Okay. Day one, you close 50,800. Now your drawdown is going to update to 47,800, which is that $3,000 between, the two. Okay. So it's an end of days when they update it. Day two, you start 50,800. Drawdown is 47,800. $3,000 from you starting balance. Total drawdown available is 3,000. So this is more for those that hold their positions during the day, or are not really, they're more day traders, not scalpers or whatever. So that's many firms offer both. They'll like, for example, you guys saw with Tradeify, they offer the intraday trailing and end of day trailing. So you just got to pick what works best for you. Now, the third type of an account is called a static drawdown, and this is probably one of the best. And like I said, the futures desk has it. You can get it up to $6,000. But how this one works is your drawdown limit is fixed based on starting account balance, and it never changes. Okay. So, for example, let's do the same thing. 50K account with 6%, so $3,000 drawdown. Account starts at 50,000. Drawdown is 47,000. So week one, you grow your account to 55,000. Your drawdown stays at 47,000. Month one, you grow to 60,000. Your drawdown is still going to be 47,000. Okay. Month six, your account is at 75,000. Your drawdown is still 47,000. So it doesn't change. It stays static. Okay. Now, reality check, you can lose $28,000. If you lose over $28,000, you can still breach your account. So this is one of my favorite plans, and it's harder to blow if you are, because it's not moving. The um, the drawdown is not moving behind you. So also, once you do, even with the intraday trailing or intraday trailing, once you move into a funded phase on both of these accounts, and you get up over your threshold amount, then that balance actually stops trailing. Also becomes static. Okay, so um, for this one, for the intraday trailing, let's say you get a funded account. You passed your evaluation at 53,100 because it's usually $100 or more. It's going to stop trailing. So you go up to $60,000, and you can lose, I don't know, 5 grand, let's say. You're not going to breach your account. So that's kind of how it works with end of day trailing and intraday trailing once you are moved over to the funded stage. Um, Here, this is just some of the, hang on just one second. Some of the firms that have, like, for example, for evaluation rules. So typically Apex has a set minimum 7-day trading. However, they have a promo right now that it's only 1 day to pass. So again, let's say you use that 50K account, you pass it, you make 3 grand in a day. There's no consistency during the evaluation. So later that night, you would get an email saying, hey, you passed, whatever. Same thing with Tradeify on their evaluation accounts. It's a 1-day pass, no consistency. However, if you go to Take Profit Trader, they have a minimum 5-day trading with a 50% consistency. And that's only during the evaluation phase. But once you pass and you get to a threshold, then you are able to withdraw money daily. Okay, whereas with Apex or Tradeify, you have to there's consistency in their funding accounts. Okay, and then you're able to withdraw during certain times. Futures desk, same thing. As Take Profit, they're called base hit rules. You can customize how many days you want to pass it within 5 to 12 days. And then once you get over to the funded account, there's no base hits or consistency rules, no minimum days for payouts. You can start withdrawing the money daily. $100 minimum, no maximum. So there's no cap payouts with them. So what do I mean by when I say consistency calculator? So Top Step, for example, or even Take Profit Trader, they have a consistency during their evaluation. So let's say the overall profit is $3,000, but one day you were trading and you made $1,700. That means you are over your best day cannot be over whatever their percentage is. So theirs is 50%. So you would just have to either make more money or just not go over the $1,500. So if you did $1,500, there's your, if you do $500 a day, that's even better. Okay. So what they don't want you to do is they don't want windfall or one day you got lucky and passed. And then once you pass, you go over to the funded stage and you fail it because, you're not consistent or, so basically you just want to look at the rules. Some have this consistency calculator afterwards. I would highly suggest that no one tries to pass the accounts in 1 day or even in 2 days or whatever, especially sizing in and trying to wing it and getting lucky, because you start to get addicted to that dopamine. Like, oh my gosh, I just passed the account today. I'm, doing great. because you're most likely over leveraged, or you got really lucky because we moved so much, right? And you're going to try to take those habits over into your funded account. And the thing is, I don't care what you guys see on social media with people posting all of these gains, this and that. Um, you know, aim to be consistent and don't use, they're over leveraging. Don't use um, the minis, which is NQ or ES, to pass your account, because it's going to be harder once you get to the funded stage. So another thing you can do actually in this calculator is go to each firm, and let's say you want to use Top Step, 50K. So profit target is 3,000, drawdown is 2,000, end of day trailing. Okay, let's add Tradeify, 50K. It's auto applied for the discount here. Include the activation fee. So notice how Top Step, the original price is $49. Once you pass, there's $150 or $149 activation fee. Your final price for a 50K account is $198. Whereas with Tradeify, it would be $97. Let's add another firm. Take Profit Trader. So Take Profit Trader, it's same thing, $3,000 profit target, drawdown is 2,000, end of day trailing. They actually, right now, it's 40% off with no activation fee, so I'm not going to add the activation fee. But you can see how Tradeify and Take Profit Trader are much closer as price-wise compared to Top Step. And Take Profit Trader has a daily withdrawal, whereas Top Step does not and Tradeify does not. So you can compare the same accounts from firm to, from the same firms. Like if you want to see if it's better to do like a 100K account versus, let's see, Apex Trader, 50K, they have 80% off. So right now, the valuation for a Apex account for a 50K is $29. Once you pass, total cost is $114. The futures desk, 50K, 70% off. So it's $92. And this is the static account. Here you guys can actually, these are my favorite ones, the firms up here. There's many firms. You can also look at the detailed analysis. Let's say you want to just weed out static accounts or end of day trailing. Just you can do that and compare, compare them all the way to the right. You can click on their full details. And this is more of a condensed version of their website. So it gives you more of like rules, but that you would need to, know. So like, for example, news trading. Some firms will not let you trade the news, others will. Let's see. What am I trying to find? Oh, sorry. Down here, if you see, there are many firms, guys. There's like, I don't know, 66. There's even more active firms, but a lot of firms closed last year as well. So this is just kind of showing you guys that there are many out there. I happen to have vetted these for, like where I've taken payouts and past the accounts, and then I've vetted these down here as well. I will not work with any prop firm just because they have prop firm does not mean that it's good by any means. So let's go back to this. So just do your due diligence. Back here. Okay, so this is what the platform looks like for Project X. So for example, if you go to a Top Step, it's Top Step X. If you go to the Futures Desk, it's going to be called like TFDX or whatever. It looks just like TradingView. Up here, you would input the, NQ or ES or MES, whatever you're trading. On the left, they've got a little settings button here, and you can set up your trading. Copy trading. So if you get multiple accounts, with one click, one chart, it's going to copy it all in all of your accounts. Okay. With that said, if you're brand new to it, I would not get multiple accounts at first and try to like trade copy them, unless you're really already pretty consistent, with options and stuff. I would just stick to one account, pass one account, and then add. Take a payout and then add. Okay. Also, the way you would want to treat these accounts is based on the drawdown amount. So for me, like I trade, some people say the sweet spot is 100K accounts. I personally prefer the 150K or 300K accounts. I know it's a lot more to meet the profit, but it gives me more of a drawdown, so I have more room for error. Basically, if you're going long, you're going to buy market or join bid. If you're going to short, you're going to sell market, join ask. So the way, whatever you're trading with right now, whether it's Fibonacci, whether it's moving averages, support and resistance, that's the way you would chart this. You can chart your QQQ or your SPY on TradingView or whatever you're using right now just to chart. You don't have to chart on this platform. This is just for executions. You can if you want to, but this right here is NinjaTrader prop platform. Same thing. I actually prefer NinjaTrader charting platform over TradingView because I find it more accurate, but you don't have to. I also use NinjaTrader because I can add on third-party indicators for order flow footprint, which most don't use order flow footprint. So I would say like 99% of traders don't use it. But for me, it just gives me more of an edge to see what is happening inside of a candle, versus just looking at the regular candles. So let me show you guys because I don't have it up here. This is what it looks like. So it kind of gives me like the delta, negative delta, positive delta, that kind of a thing. And I use it in conjunction with my technical analysis. So, and then here's the Tradovate platform, very user-friendly. Same thing, buy market, buy bid, sell market, sell ask. So if you think the market's going up, you're going to buy. If you think the market's going to go down, you're going to sell. And, you can cancel your positions. To get out of a position, you would obviously just do the opposite. So if you buy market and you want to get out of the position, you can sell market. Just make sure you don't hit sell twice, because then it's going to put you in the opposite position. So if you're new, just hit the cancel button or close all or something. So basically the takeaway is, if you know how to chart right now, whether you're charting SPY or QQQ or Apple, whatever you're using, it's kind of like how you would chart your NASDAQ or SM or ES, because Some actually, I know a lot of traders that will chart on SPY and execute on ES, or chart on QQQ and execute on NQ. I don't do that, but some do. Let me go back through to show you guys. Everything in here, guys, is free. There's this educational resource. Before you open up any positions with trading futures, you want to check to see if the firm allows trading the news. Some allow it, some don't. Some don't allow it like a minute before or a minute after. And when I say news, I'm talking about like the major news like CPI or FOMC. So you would just want to go and click on the calendar and see, okay, what do we have going on, before I take a trade. And it's also good for you to know, because I see so many people will be in a trade and they're like, huh, what happened? That candle just came through. Um, Also, like, we've got the earnings coming up. You want to check to see, because as the New York's stock exchange closes, our futures is still open. So when we have tech stocks like Microsoft or Nvidia or whatever it is, or during the earnings, we are still able to take trades. So you can check the earnings hub. Also, go through bar chart, Benzinga, Financial Juice, to watch the news. That's another thing, is that a lot of people don't look at the macro stuff, which you should have an eye on when you're trading. Down here, there's prop trading, or knowledge base, risk management, technical analysis, things like that. But what I do want to show you guys, and I think it's very important, is it's in this trading psychology. You can go through and kind of input. I think a lot of we're humans, okay? So we are going to have emotions, and I don't care what anybody says, like leave the emotions behind or this and that. Yeah, okay. Well, we're human, so we're going to have them. So if you are, you hold an honest self-assessment, it's going, and you assess this, it will help you with a trend, with what ticks you off, or like what, before you go on a tilt or something, you blow your account or whatever, you can check your bias beforehand. But this is really what I wanted to show you guys, which is this risk management calculator. And this is why most people blow their accounts, because they just do not calculate the positions that they should be in. Let's say you have a 50K account, which you get a drawdown of $2,000. Okay. Technically, you should not be risking more than 2 to 5%. 5% only is used for high conviction setups with strong edge. Okay. So let's say we're going to trade NQ, which is, the entry price is going to be 25,000. We're going to have a hard stop loss. That's another thing. You should always, always, always have a hard stop loss, because if you don't, the market will, and your stop loss is going to be auto liquidation. So basically, based on what your account size is, you should be able to use, 5 MNQs. Your risk per position is $100. But this is what I see. They go actually even more. This is 15%. If I had 50% or 70%, I would click on those buttons. But basically, this is your account destruction zone. 15% risk per position is gambling. It's not trading. So 5 losing trades, your 50% of your account is gone. 7 losing trades, your account is destroyed. And this is how 90% of traders blow up. So what I hear, and I've taught thousands of people this, and I have a Discord, and people will message me and say, "Oh my gosh, I blew an account," and I'm like, "Oh, okay, well, what did you size?" Well, this is what they sized. They went with NQ at a $2,000 drawdown, and they're using 4 to 5 NQs, so they're basically full porting. Now, even here at 15%, it says you should have 1 contract. Now they're going in with 4 or 5 contracts. So they're not risking $300. They're like risking basically 70 or 60% of their account per position. Yep, you're going to blow your account within a day or two. It's going to be done. If you know, it's going to be gone. So it's so important to know how to size into this. It's kind of just like I said earlier. If you are trading options and the first thing you went was trading SPX and you had a $2,000 account, tell me what would happen after a few days. So that, you know, and you're full porting pretty much. Yeah, good luck, because that's how you get out of the game, you know, and then you just become in a cycle of trying to pass, you know, your evaluation, because at the end of the day, you should have a plan for your trades. Your risk to reward ratio should be at least, so you can have a 1-to-1 if your win rate is pretty high. Okay, so at least 1-to-1 means you're going to, you know, grow your account. But if you have a, let's say your reward ratio is 2-to-1, it means that you're risking $500 to make $1,000 per day. With this ratio, all you need is a 33% win rate to break even. Anything above that is profit. So this is why, like, your profit targets must exceed your risk. What I see is people risking, they do the opposite. They'll risk 1,000 to make $200. They'll risk 2,000 to make $500. Um, and you know, your win rate better be really good if you're going to be doing that. Um, Otherwise, you're just going to blow your account. Also here, you know, this trading journal, you can import your CSV, your trades, and just kind of follow along and see how, you know, you can, whether you're using like NinjaTrader or Tradeovate. This is free, by the way, guys. You know, I know that there's a lot of premium journals out there that charge 30, 40, or $50 a month. This here is free. It's more of the basic stuff. If you want like a premium, you can also click on that and get a premium one for free. Skip tour. This is last 90 days. So it'll kind of tell you, like, you know, your win rate, how many total, whatever profit factor is, and things like that. It will give you, oh, I can't find it, market prep. So you can set up and record your market prep, your trading, record your live trading trades. Let's see. So this is kind of like, this is mine over the last 90 days, just kind of, you know, slow and steady. Analytics, hold on. So that's right here, and you can have that for free as well, guys. I feel like I'm forgetting something. Maybe not. Well, I'll think of it if I'm forgetting anything, but I think that's probably it as far as what you guys need to know to get started. Let's see, do you guys have any questions? I need to find it. Where are you guys? There you are. All right. Oh, hey, Books. I've been doing lots of futures stuff. Gotta hop on your guys' stuff sometimes. All right. So do you guys have any questions over anything that I went over? You can go back to this, you know, where you learn. It's all in here, guys. I think I'm the only one that provides the free educational stuff to get started and then to keep coming back and, you know, to keep you successful. Because one thing I absolutely hate is seeing traders jumping from Discord to Discord, buying an evaluation from one prop firm to another prop firm to another prop firm or whatever it is, when the first thing you need to do is have the fundamentals. Second thing is to have the risk set up. You know, get that under control. It's not the prop firms that are the problem. It's that you don't have the plan. And every single day, if you want to grow this as a business, then that's what you need to treat it as. Every business has accounting. Unless, you can't get into trading and try to wing it. Sure, you might get lucky sometimes. Yeah, it's happened. But if you think you're going to grow as a trader, no. Also, I see so many who just want an entry and an exit. They don't want to learn. They don't want to come to webinars like when we offer free technical analysis to teach you how to fish for yourself and use us as Confluence. No, they would rather just, kind of, they think they know better. And, 2-3 months later, they're gone because they didn't take the time in the beginning. And, unless you've got a shitload of money to blow, then I mean, be my guest, do whatever you want. But you build habits when you start out with doing the proper stuff. So awesome, awesome. Okay. Do you guys have any questions? I don't see any questions in the chat. Let me ask some trivia and then I'll give out 2 free Discord passes for 30 days for free and one account, 150K account. So let's see. And also, if you have won in the past 30 days, then please let somebody else win. So, okay. So futures contracts. So give me one asset that expires monthly. So the first one that answers. And also, if you guys like these free tutorials and webinars and stuff, and I'll do more, also in like technical analysis and order flow footprint. If you guys found this useful and you do end up going to a prop firm, just use my code. Nobody? Can you guys hear me? Close, Mike, but it's not. No. Not a yes. So Which asset expires monthly? So index futures like ES and NASDAQ, they expire quarterly. March, June, September, and December. Yes, good job. CL. Good job. All right. If you can DM me, Angel Goddess Demon, for 1 free month of TWL. All right. Next question. Um, how many participants are in futures trading? Let me ask another question, an easier question. What is the name of the smallest price movement? So the first question, it's probably, you'd have to probably go back and search, but yeah, the chat is very delayed. I know, I'm not sure why. Um, but what is the smallest price movement? What's the name of that? And Angel Goddess, you already won something, so you cannot win this one. So let someone else answer, please. There you go, Mike. Mike came in a little bit before. Okay. So Mike, DM me if you have not won in the past 30 days. DM me on Twitter for also a 30-day free trial. And then I will do a drawing for one prop firm 50K. And that one I'm going to, let's see. How many types of drawdowns are there? All right. Well, I guess no one answered for that. There are 3 types of drawdowns. So intraday trailing, end of day trailing, and static. And it looks like somebody asked what platform is similar to Take Profit Trader as far as profit withdrawal. Glenn, that is going to be the futures desk. And they are, like I said, they've got 70% off their static accounts, but their plans are customizable. If you click on static, and you can customize this, you can change your drawdown. But this is actually better than I would say personally than Take Profit Trader, because not only can you like customize your plan or whatever, but your drawdown stays static, so it doesn't move. Whereas like with Take Profit Trader, in the funded phase, you have that intraday trailing. So, and when you pass, you get you can withdraw daily. Um, $100 minimum to withdraw. There's no cap on withdrawing, and they also move you to a live. So live capital backed payouts, micro scalper friendly. It's one of my favorite firms actually. They are more they're more of a premium firm where they don't want people to how do I explain it, make bad habits or like rules. So like if you fail an account, they're not going to let you reset your account 30 times that day because people will do that. If a firm allows it, they'll just keep resetting and resetting and resetting, and they would only allow like one reset a day until you kind of calm down and so they also do not have any consistency once you pass. So I would say for the static account, sorry, let's see. You can choose your drawdown amount here. Just kind of also how many days you want to pass. Also, guys, take your time in passing these because the more time you take to pass, the better it is because oh, and also they don't have a activation fee. The more time that you take and you take your time, it's going to transfer, those habits will transfer into your funded accounts. So I see people passing their accounts within a day or two, and then as soon as they get their funded accounts, they fail them because they start with the bad, your mindset changes and you start with the bad habits immediately, and that's not what you want to do. Any other questions that you guys might have? Like, it doesn't, I mean, I'm here, so it's Saturday. I mean, you guys want me to look at any other firm and compare something for you guys? But I mean, oh, shoot, I knew I was forgetting something. And I just remembered I was going to execute some trades for you guys. How come nobody reminded me that? Oh, you silly gooses. All right, so this is TradingView, and the reason I'm showing you guys this specific day is to show you why not only sizing matters, but having a stop loss matters. Okay, so remember back on October 10th when we had a huge drop? Okay, so this right here is NQ. Okay, remember I said that it, for every dollar that it moves, it's $20. Okay. Whoops. No, 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 no. Okay. So for every 50 cents, so I don't know if you can see here, it's 328.50, 0.75, 0.00, 0.25. For every 0.25 that it moves, it's $5. That's an NQ. If you're using the micro version, it is 50 cents or $2 for every dollar that it moves. So let's say we were trading NQ, and I don't know, we want to go short, okay, because we think the price is going to come down. So this is just one contract. Let's put it on the 1 minute. Okay. You know what? Hang on. Let me start over. Just want to make sure that it's not yes. So is it that? It's a 5 minute. Replay, start a new one. Trade. Okay, so sell is due. So see how here it's a stick value is $5. So for every 0.25, it's $5. So let's say we think, hey, it's going to go down. We're going to get into a trade. Okay. Let's just do it in minutes. I'm going to speed it up a little. Let's just speed it up. This is one contract, guys. Now let's say you didn't have a stop loss. And it was the other way around. You went long. You would have blown your account pretty fast. I'll show that example too. This is one contract of NQ. It's up 14 grand. Okay, so one contract is like 18, 19 grand pretty much. 23. Then we had that gap up, okay? Now, same thing. Let's just say, let's just close that out. Okay. It's gonna start. I don't use TradingView a whole lot, guys, so I'm sorry. I'm sure there's better and easier ways to do this replay thing. So I'm just gonna exit the replay mode. Since I use NinjaTrader, I don't use this, but I want to show you guys why having a stop loss and also playing with the correct size is so crucial. Okay, let's say we're here. We want to trade. And we want to go long because, hey, we're thinking, and also no stop loss because, I can just get out of this trade real fast, right? Okay, I'm going to go long. Oh, look, my account would have been blown by one contract in seconds, minutes. Now, mind you, when futures traders start trading on a 50K account, they go in with, or with a $2,000 drawdown, they'll go in with 3 or 4 NQs. So basically full port. They wouldn't have even gotten ahead, like they would have blown the account right up here. So that's what, like I always say, it's so important to okay. Stop this here. I don't know what I just clicked on, but anyway. Let's do this with micros. Show you guys. Do I just like hit? Nah, it's too much. Yes, you guys can make fun of me. Sorry. I don't care. Okay, so let's say we are going to do MNQ. Also notice here how it's got like the same thing with NQ and whatever. It's got 1, 2. What you want to do is be in the correct contract. So that is like right now, the December 2025. Next one is going to be March 26. So notice how this is the Z contract, H contract, M, U, and then it starts again with Z. So we're going to click on Z. Oops, Z. Let's do the same thing. Where's the trading panel? Oh, you know what? Maybe for the replay, I need to do just the straight M and Q. Okay. Okay, so 1. Do we want to buy or sell? It doesn't matter to me. I just want to show you guys like whether you were on the right or the wrong side, just how quickly you can lose an account, even with the micro, when things move fast. And that's without having a stop loss. You should always have a stop loss. I have a 10-point hard stop loss. However, that's very tight for majority of traders, but I am fast, like I'm in and out of trades quickly. And I have a high hit rate, but I typically get anywhere. My goal is to get at least 10 points, before I start to scale out, and then, 15, 20, 30, whatever it is as I'm scaling out. So let's just, well, let's sell so we can see how much money we could have also made just with one. This is 1 micro. So over here, damn it. I didn't even see what it was, the price down here. Okay. But the potential with just 1 micro. So when you guys start trading this, don't look at it as how much money you can make or whatever. Just look at it more as like how consistent. So if you're using 5 micros, continue to use it until you're very consistent. And then after, move on to, 7 micros, and then move on to 9. So like scale out as you're growing your account, as you are getting better at it, and when you're consistent, that's what you should really be doing. Not, oh, I didn't know I had a limit. So, yes. Okay, so let's see. Let's do ES. So a lot of people trade ES. When I got started, I did trade ES. However, when I started trading NQ, the first few times I tried it, I was like, what the heck is this? It was too volatile. So NQ is a lot more volatile. That's why like it's always best to do MNQs or the micros. Once you get used to it, then you just realize that it moves in different, it moves differently. There's less volume on it. That's why it's more volatile. but it also tracks, the NASDAQ, 100 companies. So if you are looking, what I also like to do is watch, the Mag 7. So I'll be watching NVIDIA, Microsoft, Apple, Netflix, like all of those, like what they're doing, and to kind of gain or gauge which way that if the tech is strong, then we are, and if my levels are showing me that we should be long, then there's no point of me trying to short it, or vice versa. Even though I love shorting, um, but let's see, let's do replay, start new. Let's start here and then select bar. Okay, this is ES. So you'll notice how with ES, it's not, you don't make, it's going to go, like it's slower, and also the dollar amount is less compared to what NQ does. But ES also tracks, or S&P 500, the 500. So, whoops. How do I go back here, like without? Is it still select bar? Where's my trade? Oh, damn it. Never mind, let me start again. I should probably learn more with, or play around more with TradingView. It's just that I don't care to use it as much. See the highest. So 12 grand is the highest, I think, is where I hit, compared to like NQ, double that in the same amount of time for this, like one contract, right? Just click that out. Yes, let's go to MES, which is the micro. So this one changes $1.25 per tick, or $5 per point. So again, it's kind of comparing SPX and SPY. Really, you guys, there's not a whole lot to futures compared to, with options, you have to like learn the Greeks and all of that kind of stuff. And even if you're in the right direction, if it's not, if the IV is not there or whatever, it's not, your contract can still decay. So I think there's pros and cons to both, futures and um, options. I will also say that I have seen 90% of people that go to futures don't go back to options. Some will go back. I think I know like 4 people have gone back out of thousands. And then some will do both. But I think it just kind of it's more of a preference. And I've seen like even some of the biggest furus you guys have seen over the past couple of years that went from options. They always, and I've been doing this a lot longer than they have been with trading futures, and I've been trying to get futures or people into futures for a long time. And they used to make fun of me, which is kind of funny because now they're all trading futures. So I like to remind them that I was the OG. So, and a lot of them now say like, why didn't I like listen? Why didn't I go back and start, trading futures before? So, okay, this is the micro version. of MES. Trade. Let's buy this time. So even with one micro, you're down, like with no stop loss, you walk away or something, and this thing starts happening, you're down. It's like, there's no point of it, you guys. Really. Have a stop loss. So what? It kicks you out. You don't have to make up, all of that money, or your account is not blown. You can always re-enter. You can also always scalp along the way. Re-enter a position. That's if you know where to do it. Don't flip flop like a fish. That's not what a good scalper does. They just know where to enter and exit, and then re-enter and exit. So it's not meant for everybody. Hey, Scrooge McDuck. Do you ever trade futures not using a prop firm? Yes, so with what I do is I trade prop firms and my own broker connected to NinjaTrader. So that's why I use NinjaTraders, because I can actually connect different prop firms that use Tradeovate and connect my own personal accounts. So with one trade or one copier, or I can execute, and it will multiply in all my other accounts. So, and people will also use different prop firms or same prop firms, but with many accounts, depends what you find that you like. And that's to spread out risk. So if you, for example, instead of going with, let's say you have a, I don't know, 50K account, which is that $2,000 drawdown, and you have 5 accounts. So instead of going with one NQ or 10 micros in one account, you can spread that out and go with like 3 micros in each account. And even if you aim to make, it's really easy to make at least $200 per account. I know, I say that, but in futures it is. But what ends up happening, we become greedy, and that, like for me as well, you're going to start seeing P&Ls that you probably haven't in a long time, or if ever. It depends upon how if you're undercapitalized or not. And that greed, that dopamine, is what kind of starts to hit. And but if you can spread it out and pretend like it's one account, so like your 5 accounts is just this one big account that you have, and you're making, I don't know, $1,000 a day. That's, even if you're making $300 a day, that's more than most people make, guys. I find it funny when I see people who are like, oh, you only took, took 10 points or 20 points on trading NQ. Okay, well, NQ is $20 per point. If I took 10 points, one contract is $200. If I took, 20 points, it's $400. But chances are I have bigger accounts, so chances are I'm not in with one contract of NQ. So, I don't care. Like, to me, at the end of the day, I am looking for profit. I'm not looking for home runs every single day. I know I've closed my, I've had people who said, hey, how do I deal with FOMO? Yesterday I missed that whole move, just to give you an example, whatever. And you know what? The market's going to be here tomorrow night. The market's going to be here Monday. It's going to be here. So what? You missed it. Big deal. You could have also been in it and had a bad day and, been red. So what people like, you got, a lot of people have a lot like that false sense of reality, thinking that, they could have just been green. Well, you could have also been red. So, but I can't stress enough, guys, when you start out trading futures, do the micros. So even if I am trading NQ, for example, and you're trading MNQ, It's the same thing. I'm just trading my size. My account size is different. Everybody's account size is different. So you can't compare and ask, hey, how many, um, accounts or lots are you going in with? Because we don't all have the same leverage. So that's kind of the difference. You have to tend to what your account size is, and don't worry about the profits and the like the just worry about the consistency at first, and that's how you're going to build good habits and become a better trader. I wish I started out with prop firms when I first started trading. Like my first year of trading options, I was down 220 grand of my own money, and it's a lot of it expired worthless. I was over leveraging, playing zero DTE, things like that. But, um, you know, it is what it is, I guess. Any other questions you guys might have? Nice job on your win rate of 88% over the past 3 weeks. Let's see. Okay, I guess you guys don't have any more questions. Angel, Goddess, Demon, and Mike, if you guys can DM me so I can get you guys your giveaways. Otherwise, see, it says keep training, loss in cash. Um, you're down from options too? Nah, me too. I will say though, in my server, there's one of my analysts. He doesn't do Twitter. He doesn't do social media. He's an amazing trader, but he's not a social media person because he focuses on trading. Um, he buys like he'll buy leaps. He'll buy like monthlies. He plays the long game, which is smart. For me, it was always like I just want, that big percentage quickly you know, and now I've actually become a jinx in options because anytime I get into an options play, it doesn't matter what it is, something out of the left field will come out. So like I'll give you a few examples. I get into BA, the freaking the doors blow off the airplane, the stock drops. I get into INTC, the Department of Justice launched an investigation. It's like, what the hell? Every single time I would get into option, something just completely like comes out and tanks the stock. So everybody has kindly asked me not to get into there. And it's not like, guys, it's the craziest phenomenon. It's like 90%. If I get into something, just do the opposite. I'm like the Jim Cramer. Something's gonna happen. So, but not with futures, only with options. Uh, Kind of tired, but I'm glad that you guys showed up and you're learning something, and I hope you guys learned something because keep showing up and play with some accounts. The more you learn, the better it is. Also, I will tell you guys about. I've been in this industry for a long time, and another thing that I see is people jumping from a strategy to a strategy to a strategy when it comes to trading and technical analysis. And let me tell you, each time you do that, you are delaying yourself by like 2 or 3 months every single time, and then you end up having analysis paralysis. So learn something that is very, easy or basic, but it's like your go-to. it's a hit every time, or your A plus setup. It's not a hit every time, but you guys understand what I'm saying, and stick to that. You do not need all the bells and whistles and stuff. And actually, the picture that I posted the other day, um, I was I don't have those indicators on. Aside from my order flow footprint, I was testing because a friend of mine asked me to test some algos, and the algo has a lot of things on the charts, and I can't. That's too much for me. And I knew that was going to get people, you know, into um, talking about the algos or whatever was on my charts. Keep it simple. Find something that works for you. Like I have a very simple strategy that I follow along with, added to order flow footprint. And that's how I take my trades. And um, also look to see what gets you in trouble. Is it if you're sitting in front of the screen all day, then look to see just to trade the first, 2 hours and then walk away, close your screens. With me, it's that I do have a tendency if I'm sitting at my computer and I get bored, I will then continue to, like around lunchtime when it's the worst, when we're just like in a chop. If I get bored, I'll start fiddling around like without, even realizing, and it's not worth it. So look at your emotions and see how you guys are. Jot it down. Go to the website that the profitfromtrend.com. It's free. Go in there and, it's stored locally on your, I'm not going to see anything. But, check your emotions and see what your, we're not all the same. Some people will go on tilts because of greed. Some people will, are fearful or anxious or whatever it is. Some just follow the herd. So it just depends. Look at what triggers you, and work on that. Yes, too much to process, you'll miss the trade. Yeah. I always say, like, keep it simple, and whatever your back test and see whatever works, what's the most simple for you, and stick to that. So, but if you're jumping from ICT to SMT to um, moving averages to, I don't know, somebody that just came up with a brand new concept, which none of these are brand new concept, guys. It's like you're not doing yourself any service. You are just prolonging your or you're delaying your potential. I had the privilege to take courses with Investopedia Academy back when they had it, and I was taught by a retired market maker who, and my second mentor is a retired market maker, or he's not retired, sorry. My second mentor is Peter Tuchman, who is Einstein of Wall Street. I'm sure you guys have seen him, but my strategy is simple and basic that I use, and it works really well. And that's what matters to me. So you don't need to complicate or overcomplicate anything, because it's just going to give you analysis paralysis and you're not going to be moving forward. So let me know if you guys ever want, like, for me to do some like technical analysis, but I'll do that more. I do that more actually in Discord, even for free. I don't really do it on Twitter, just because there's so many trolls that come out, and you know, um, I just rather leave it to the ones that are serious about it instead, to the ones that are not. So, any other questions? I know we've been here for a long time, but thank you to my 2 YouTubers, like YouTube viewers. You guys are so guys, I just started like a YouTube thing when I'm streaming here on Twitter. It streams over there, and I don't even have a following really over there. It's like 80 people or something. What do y'all want for Christmas? All right, guys. Well, have a great Saturday, and I'll do some of these more often. If you missed something, you can go back through this webinar. I have also done a few webinars before. If you just look through my page, this one's probably like one of the longer ones, but it will help if you need to like have your memory refreshed, and you can also do the reading on the website. So have a great day, guys.